Okay. So what, I've got the mic here, which I'll pass between them, and we open it up. So who would like to start? Toby, do you want the mic or can you yell?
Thanks, Toby. I'll have a crack at it. Peter and I have had this discussion over the years that, that's a very, property values are a double-edged sword, aren't they? So whilst it's difficult, makes it more difficult for new entrants to come in or existing entrants to expand, it's also pretty helpful if you're trying to get out. And it's also pretty helpful when you talk to your bank manager to say that, here's a whole lot of comparable sales that have lifted land values by 5, 10, 15%, whatever it happens to be over the last couple of years. So it is, look, it's the market as a whole is moving. If you looked over the last 20 years, there's been times when there's been a premium paid for aggregations, larger holdings, and there's been times when there's been a discount paid for that. And I think at the moment we're certainly seeing, as Danny suggested, a period where larger aggregated parcels are attracting a premium in the market rather than the small family holding, but they always get dragged along. So whether it's immediate and whether it's the same value, it's really going to be, it is going to drag it along, and it is going to help with equity, and it is going to help people with succession planning as to whether they get out. I know there's a few of us in this room who have benefited from Hassard's, foray into this space, and look, I think it's a good thing.
Yeah, I'd have to say, I'm not seeing a big kick along in values as a consequence of foreign investment. I think it's probably the opposite. The fact that there's some foreign investment, particularly at scale around there, has probably just meant that those properties, or the sales of those properties, certainly last year and the year before, were just being activated in a market that was otherwise down probably 70 or 80% on volume. So there was no farmer market 2 or 3 years ago. That farmer market, I think, has come back in the last 12 months, and that's simply a function in my mind of liquidity. There's more participants back in the market in terms of our primary lenders and our second-tier lenders that weren't there, just simply weren't participating 2 or 3 years ago. One begets the other in terms of their participation as well. So it's not until they see an opportunity to be able to clear the bottom of their books that they'll think about rebuilding at the top end as well, after you've gone through a period of the stresses we had through the GFC. The premiums, if I could call them that you're seeing now for aggregated parcels are a function of a weight of capital and a lack of opportunities. What's interesting is the opportunities weren't there probably in the last 12 months, but in the market right now, you've probably got 2 or 3 or 4 holdings available that all have values in excess of $100 million. And I don't actually think the capital will chase all 4 of those opportunities the same way it did opportunities last year when they probably did pay a premium. So we could be back in the situation. It's happened very, very quickly. It's just a function of weight of capital and how that imbalances with supply. To what John was talking about a moment ago, where in fact those aggregations, if they sell, so if they can get a vendor to agree, might actually settle at a discount just because of their physical size. So the big one of Ronnie Greentrees is probably a good example. There's 1 or 2 in the Riverina that are available off market at the moment. I don't think between Westchester, Warrakirri, Lawson and Hassad that they'll all chase each other up and bid all of those assets up, because there's potentially $400 or $500 million worth of assets available contemporaneously, and there might not be $400 or $500 million worth of capital there. So that's what happens at the top end. The swings are really wild. So no, I don't think you're seeing foreign investment dragging up the value of things. There's some really nimble and smart foreign investment that activated in that gap, in that 2 or 3 year gap. A lot of it was private equity, high net worth money, that saw the disconnect and saw the opportunity. They've bought really well. I don't think they've pushed the market up. If anything, they've been providing people with an exit they otherwise wouldn't have.
Just mindful that some people might not be able to hear all the questions, and likewise not be able to see all the people answering them. So I'm going to pass the mic to the person that wants to ask the question, and then I'm going to ask the person that's been asked the question to stand up at the podium, okay? Thank you.
Thanks. Look, just a question, and it's supply chain related. It seems to my mind in the business that we're in, which is grain transport, logistics, right through to Southeast Asia, and similar to what Cargill does at a much lesser scale, but it seems to my mind when you go into those countries and have to compete to sell the commodity from the grower here in Australia, there's plenty of other countries that are offering the same grain on the same day at a different price, a cheaper price. So it's becoming a logistical play for the country as well as it is just from a land price point of view to able to get our commodities that we grow to the marketplace at a much cheaper price than what we have in the last 50 years, and deregulations come along. But we've got to start to think about, well, how do we get the external investment to come into Australia to get the logistics supply chain to get that at a half price over the next 20 to 50 years so that we can actually compete, which will then allow us to pay more for land and get a greater margin to get some of that foreign investment. So, Peter, Danny, sorry, are you seeing foreign investment to come in for logistics companies as well as land, but just being able to get that money to come in? And the example was ADM, I suppose, as well.
I don't know if I should talk too much about ADM because Sunil's quoted me in the paper criticising our treasurer heavily there, so I won't open that can of worms again because I'll probably get a kick in the pants from the media people at the office. Are we seeing money coming into that? Yes, and it's not just from the corporates. The institutions, the pensions that we're talking about are actually more comfortable with investing in port facilities, railway lines, that sort of infrastructure, even the upcountry stuff, than what they are investing in farm level. I think the easiest sell is if we get ourselves organised, if we get our big traders to sort of think outside the box a little bit rather than relying on what I call agrarian socialism by government. If we can get them to draw some of that investment in and direct it to where it needs to go, that's an easier sell worldwide, an easier sell than what getting people to come invest in natural production methods. So, the big challenge is, instead of lamenting a lack of underinvestment in rail in the last 2 years, take the twiggy forest, get a bit proactive, and even if you're not going to fund it yourself, because our commodity doesn't allow us to do that, work with government, work with farmer organisations and work out what we need, where the shortcomings are, and that infrastructure investment will come.
Now I saw a couple of hands at the back here. Was there a student at all I saw before? Another?
Don Lawson, Beef. I think Peter Tuohey's raised a number of issues raised, but the key cornerstone of our agriculture is family businesses, and the figures that John had up on debt in Tasmanian dairy industry, I think might reflect across other industries. And what you raised is, A, we haven't got enough people, so we've only got 5% of our rural population with tertiary training, and I think that compares to 25% in New Zealand. So you would invest basically in people. You're going to go to New Zealand or America. Secondly, the big issue we have is this flight of capital out of regional rural Australia in the form of super funds, and I think we are chronically short of equity. It's either got to come from foreign investment, but in the meantime our super funds are all getting invested in Melbourne, Sydney or New York, and I think we've got to start lobbying the government. We've started a bit of a discussion paper where super funds raised in the regions have to be reinvested in the regions, and I see the future of agriculture as joint ventures with good family farms with super funds, and we're going to have to lobby governments, I think in Norway and New Zealand. Super funds raised in the regions are basically reinvested in the regions, and it's our capital out of regional Australia that's flying. And if we're short of, if we're going to double production, we've got to have two things: a lot more of these Marcus Oldham students, and we want equity at levels I'd suggest in rural Australia is about as far as we can go. So I'd welcome your comments on how the hell do we get legislation in place where our capital has to remain in the region of rural Australia.
Yeah, no, all good points, Don. Certainly agree with you. So the first thing the VFF has done is gone to the government and asked for some money for careers advisors. So we've got somebody out going around to the schools encouraging a career in agriculture because it's had a negative impact over the last 10 years. So we're trying to promote agriculture as a good career path. Certainly there's a good group of people here that will make fantastic managers for properties. But for superannuation funds to invest in agriculture, we've got to be very profitable and productive because certainly, as I said, the top 20% do very well, and John says they change every year, but I think there's some certainly very good models out there where we could improve with well-trained young people managing those properties. We can make it a worthwhile investment for superannuation funds. So before we legislate, I think we'd need to make sure that those superannuation funds are invested where they're going to get a reasonable return because nobody wants to invest in something if it's not going to return a reasonable amount of money. So I think developing those procedures, getting those young students out there that are well trained. And one of the big points I often talk to our agriculture minister about is risk management. I think that's something John will be well aware of is how do you manage the risk of climate and market, because he said about 3 out of every 8 years we make money. Well, to invest in something that only makes money out of 3 out of 8 years, it's probably not a real good thing. So we need to change that so it's probably 5 out of 8 years or 8 out of 8 years. So certainly, again, I'm talking with the government in trying to develop some risk management procedures that will improve that standing and then make it a good option.
Hang on a minute, Paris. Can I just get you to talk into this? It's a big room.
Yeah, my name's Paris, so I'm first year Agribusiness. Today you spoke a lot about your managers on the farms. What about your other workers coming through, like your other people below your managers? Do you feel that they should be educated as well, and how do you come around giving them the higher wage to be educated if you're still doing those jobs?
Thanks, Paris. Look, it's always an issue to try and get educated people to come on board. If you took the Sustainable Ag Fund, you know, we've got, say, 145 million of funds under management. We have full-time staff actually out on the field of 12, so we don't have a lot of staff. The particular one, we use a contract model primarily, and head office is 5 of us, you know, so that does across Cubby as well. So look, we're not big employers. The employees we seek would ideally be tertiary qualified, either from, we've got a Marcus grad, we've got ag science grads that are actually on farm. One of the, I suppose, interesting observations, and it's only that, is that we seem to get people who want to go out into the bush, do a year or two jackarooing, jillarooing, working on the operations, then head off to Marcus or UNE or somewhere else, and then think that they're a bit above sitting in the paddock again, you know. And I think it's a real shame because, one, you know, they can earn as much money or more money out there doing that, and we actually, that's where we need the education. You know, we don't need more spreadsheets. You know, we need more people actually making good on-farm decisions. Look, I think it is an issue. It's a cultural issue. You know, as I think it might have been Don, you know, made the point before that if you go to he was New Zealand, but if you go to the United States in the feedlot sector, you know, the guy driving the truck's probably got an animal science degree. You know, the guy in the feed mill's got an animal science degree. You know, they just have this culture where they really value on-farm workers who have tertiary qualifications. We don't seem to quite have that at this stage. Slowly, look, I'm seeing it now. That's what I said. So most, you know, just go 1, 2, 3 of 4 of our managers now have tertiary qualifications. It's probably that next level underneath that we are certainly actively seeking. It's just hard to actually find them in there. So look, I think it's we talked about before that one things we're working on with Simon at the moment is tertiary post grad training for corporate managers, and looking at the possibility of can we get that somehow accredited so that they can actually have a piece of paper at the end of it to take on to the next level. So certainly I'd like to see that sort of thing developed as we go forward.
I agree with all of that. I'm just going to give a quick shout out for careers that aren't necessary in primary production as well. And so, as you think about what you might want to do going forward, there are whole parts of the agri chain that come after the farm gate. And so there's a reason that I've spent 23 years at Cargill and only in one company, because I've had the chance to go to multiple countries, get the development, and had a really interesting career. And so, think more broadly as well. It might be, and if you want to go back into agriculture, I think that's fantastic. I think you've heard from all of us that we all believe there's a future in it. We'd all like to see more people want to do that. But there are other parts of the chain, and coming into Cargill, we take on graduates, give them leadership training, give them technical training, and make sure that there are opportunities to grow here, and obviously if that's of interest as well.
G'day, Joe from First Year Agri. Just out of Australia, about the foreign investment into Africa, I'm just wondering if people aren't investing in Africa because it's probably not a safe country. I'm wondering if the locals will support it, or they are against foreign investment.
Difficult question to answer, because it depends how it's done, and this is why I think it's so important that there is governance around this. And so where foreign investment comes in and brings its own labour, or doesn't contribute to the communities, doesn't pay for labour fairly, doesn't pay tax, doesn't get involved, then it doesn't work, and then you tend to get local communities that are very against it. Where it does work well, I think it brings enormous benefits. And so what we need to do, as I sort of said at the beginning, is because we need it, we need foreign investment, particularly in sub-Saharan Africa. We need to find a way to bring out all the benefits and mitigate some of the risks, because there are risks there. But if it is done well, it can really enhance the local community. And still, even in Africa, it is going to be local farmers for the majority of the agriculture, and investment from local farmers that brings the majority of the growth. And that's why financing, and you see a lot of these microfinancing in Africa, that can really help. Even just small amounts of financing can help people get on their feet, grow their production, and do more. So no one answer, but we need to make sure it works, because we need that investment, so then we better go on it.
Okay, I've got time for a couple more questions. Yeah, we've got two over here.
Hello, Michael Vogels from Western Victoria. My question's probably directed at Peter, mostly. You talked about the greater need for Australian superannuation funds and companies to invest more, probably in Australian agriculture. And you mentioned a few good Australian companies, and I think one of them was Murray Goulburn. But I think these good Australian companies still need competition. They need strong competition. Wouldn't foreign investment be the basis for some good, solid competition in Australia to improve the productivity and accountability of these Australian companies?
Yeah, no, look, I agree with you, Michael. Look, what I was talking about is we need to look at the opportunity for Australian investment, and I think should be number one choice, but I have no opposition to foreign investment. As I said, it's been happening in quite a few good circumstances. Outside Australia is a very good model. The situation up at Cubby Station is also a very good model. So I think the competition is already there in the market. I just think that some of our superannuation funds don't realise that there is an opportunity there for some very safe investment if we can maximise the potential of our managers and our properties that are very are very good and strong and produce a very good profit every year. So we need that increase out of our local funding, because I think there is an opportunity in the future. Just we need to always not look next door, look at in our own place. It's always good to look across the fence, and I use that at my own farm. Just check what my neighbour's doing. If he's doing a better job, I copy it. Perhaps we could copy what we do with foreign investment and use it locally. But it's not about saying one or the other, but it's certainly about looking at the option of Australian investment.
G'day, Lachlan Lynch, second year Agri here at Marcus. My question is directed at John. I was just wondering if you could explain the co-investment model with Cubby Station and AgCAP, and whether in the future that's an option for more corporate investment as well as to expand family farming operations.
Yep, thanks. The co-investment in Cubby is probably a little bit different because it's quite specific. So Shandong Rui, which in itself is a joint venture anyway, owns 80%, and Will Lempriere owns 20%. So Will's not a cotton grower, he's not a family operator, not a family farmer. He's got interest in lots of different things, but primarily in trading assets, and particularly in wool trading assets, which is how his relationship with Shandong Rui came about. So it's really just a financial transaction, that one. It wasn't an existing operator that attracted capital to then expand what they were doing, and I think that's probably where the big opportunities to come in, where you have a good operator, whether through debt or just the inability to raise more debt has inhibits their growth, to co-invest with someone. Only thing I'd say is, if you're looking at that model, you have to get used to a whole level of corporate governance that you haven't had to do in a family farm. So if you're used to waking up in the morning and deciding that you're going to sell cotton that morning because it's just hit $4.95 or it's $495, or you're going to change your cropping rotations, or your whatever the decision is you're going to make, you can't do that when you have corporates or outside investors in there. They need to know that there's a decision-making process. They need to know that there's corporate governance. There's no good saying, what do you want another reforecast for? I did a budget at the beginning of the year. Every month you're going to have to do, or every quarter you're going to have to do a reforecast. Every month you're going to have a set of financials 7 working days after the month end. You're going to have a corporate OHS policy. You're going to have corporate hedging policy. You're going to have to have all these systems in place that you don't have to do on a family farm, because if you stuff it up at a family farm, it's your decision, it's your money. If you stuff it up at a corporate level, then there's questions to be answered. So look, I think it's a really good model. I don't think it's for everyone. I think there's a whole, if you're going to go down there, you have to be ready for a whole new set of rules that go around it.
Great. Well, on that note, I'm actually going to close the forum. I'm going to take a couple of minutes to thank our presenters. It's been a wonderful morning full of exceptional information, not only from the global perspective coming down to an Australian perspective, but also, on the other hand, what's involved with all this, how you form up foreign investment assets and selling and purchasing and so forth. So I think from some of the questions that were starting to be asked, there's a lot of interest out there. So there'll be plenty of time to catch up during the lunch break to ask a few more questions of the presenters. But I'm going to ask Simon to come up now just to give a small gift to each of them. So I'd like Philippa to come up and we'll thank her for her presentation. Peter as well. Thank you, John. And finally, thank you, Danny, for your time. Now, I'm also going to thank our sponsors again, the William Buckland Foundation, Web Trust, Harvard Andrews, Fairfax Agricultural Media, Louise Gawley and ACE Radio. Everything you've heard today will be put on the CSRA website under the forum, so we'll have a little YouTube clip with the audio of the presentation and their PowerPoint presentations too. So if you missed anything, welcome to hop on that by the end of the week, or early next week it'll be there. So lunch is being served outside, so you're more than welcome to hang around and have something to eat. But otherwise, thank you again to all our presenters. It was wonderful to have you along. So. Yeah, it worked out. Well, there was a bit more question.